This is your CEO assessment tip. Today we're talking about the financial speed test. You have 15 minutes to spend with your CEO candidate and you want to get an understanding if they have basic financial skills. The first question you want to ask is, does the CFO report to you? A lot of CEOs will say yes, but in fact, the CFO only has a dotted line into them and has a daily reporting either into a group CFO at a larger level or is reporting into the chairman or the board. In a lot of family offices, the CFO and the P&L is actually sitting with one of the family members as a chairman, and the CEO has limited access actually to the financial data of the company. It sounds crazy, but this is actually can be the case. So you want to not only ask, does the CFO report to you? You then want to ask, do you have hire fire function over the CFO? If the CEO can fire the CFO, is responsible for selecting their CFO, and has the CFO reporting directly to them, is responsible for the performance review, the performance management, and also the bonus and incentive reward payouts for the CFO, then that's a great sign. Your CEO definitely will have bottom line accountability and full accountability for the P&L. The next is, what financial statements and management reports do you use to manage the financial performance on your business from a daily, weekly, monthly, quarterly, and yearly perspective? Any CEO who just uses the traditional accounting reports is not using finance to drive peak performance. So an income statement or revenue and net profit, these are very blunt historic values. So if you want any indications of pre-success behaviors or any kind of financial metrics to drive peak performance or to be able to influence your revenue or net profit before they're delivered, you cannot use the traditional accounting financial statements. So CEOs who have astute financial skills, they will have custom-made management reports. So for example, one of the CEOs I worked with, when he's looking at his travel expense on a weekly, monthly basis, he does it against cash in rather than projected on revenue or percentage of revenue, and benchmarks that against what his competitors would be doing as a travel expense. And then number three, the third question I would ask is, what custom-made reports have you developed in conjunction with your CFO to drive peak performance in your organization? So for example, one CEO that I was working with, they were selling construction equipment, and he changed the metric from total sales or tonnage sold to profit per ton. And what this meant is that the salespeople not only were selling the construction equipment, but they were also ensuring that they sold the most profitable pieces of construction equipment first, so that there was an emphasis on selling the most profitable construction equipment. So profit per ton. This was a report that he started to change. Another report was conversion percent per revenue. So for 1% of customer conversion, what amount of revenue were you generating? And how can we move the conversion rate from week to week, day to day, month to month? So this was a daily report that the retail CEO wanted from his finance department, and knowing that for every 1% increase in conversion, customer conversion, it resulted in tens and tens of millions of dollars of revenue. If the CEO has not made any custom-made reports, if the CEO is not using specialized management or financial reports that are different than the traditional accounting reports, i.e., your 5 regular statements, your income statement, your balance sheet, your cash flow statement, etc., etc. These are the traditional reports that an accountant will deliver to you. If he or she is not using anything outside of that, it's really a red flag that they don't have a deep financial skill set. And then I would ask these next 2 questions, which is, when you're looking at your financial metrics and you look at your profitability, when do you use EBITDA, operating profit, gross profit, and net profit? And please explain the difference between the 4. Very simple question. If they cannot start to tell you why they would use EBITDA versus operating profit versus net profit versus gross profit, and they don't know the difference between the 4, well, bingo, in a very short period of time, you've unearthed the fact that your CEO does not have a very strong financial skill set, and you probably shouldn't continue with them. And the last question I would ask is your cost allocation. So please describe your highest cost business unit, your lowest cost business unit, your highest cost product, your lowest cost product, and how do you allocate costs across the business. CEOs who either A, don't have a strong financial skill, or CEOs who are trying to hide losses because sometimes the CEO will start a business unit or a new product line which is a failure, and they will try to hide that to the board by using a peanut butter cost method where they basically spread the cost across the whole organization to try to hide pockets of losses. This is another red flag. This is another issue. So that candidate may have a very high financial skill set, but they're purposely being swarthy in the way that they're reporting, and you want to red flag that as well. If you're really trying to drive peak performance in your organization, you will know which one of your clients has the highest cost allocation, which one of your services has the highest cost allocation, which one of your products has the highest cost allocation, and you'll be constantly working to change your revenue mix so that your frontline staff are selling your most profitable, least costly products and services, and you'll be constantly working to rationalize your customer portfolio to remove out the customers that you're losing money on, that the costs are just too high. Do not let the CEO get away with by saying, oh yes, our blue widget line is twice as expensive as our yellow widget line. Then say, great, how do you calculate that? Are you looking at cost per unit, cost per delivery, cost total customer served, or what is the actual cost metric that you're using? And then when he gives you a cost metric, you want to say, well, what was your cost on the blue widget in 2018, 2019, 2020, and what will it be in 2021? And then get that individual to state the cost, the actual metric, the actual number for different time periods and how they're moving and what they're doing to move the needle. So number one, in the fifth question, we asked them, what's your approach to cost allocation? Which customer is your most expensive, your least expensive, your most profitable, your least profitable, so on for each of the products. What metric are you using to measure that? And then what were the metric readings or the data points for 3 separate years? Should be maybe the last 2 years and then your 1 year projection. So where will you be on that metric in 2 years from now? And what are you doing to move the needle on that metric? Now, if the CEO can answer all those questions, probably we've only been interviewing them for 10 or 15 minutes. If they can go through everything I just said, you start to get understanding that they have a strong financial skill set. Obviously, you want to dig in deeper, but as the first 15-minute litmus test will say, yeah, he probably or she probably can manage the P&L, and I'd be comfortable moving forward to the next stage with this candidate. Those are a few questions you can use to catch a CEO off balance. If you like those, you could pick up our book, CEO Assessment and Selection, which has over 400 questions that you can use in your CEO interviews. Also, on our book page, you can download a free sample of the book, and you can get a link to our book page in the description of this video.